Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, September 14th, 2020. I am pre-recording this Trading Places Live for Tuesday, September 15th. Futures currently are up a little bit, trying to tack on some additional gains on the heels of a pretty strong day on Monday. I do want to jump into that. Let's go ahead and go through today's agenda. I tell you, I got a packed agenda. I'm going to try to get through a lot, but I'm going to start off going through a recap, the daily market recap for Monday. Then I want to go through actually some news stories. So we're going to go into the news, talking technically, Biotech Effect, earnings spotlight, and wrap up the show with 3 you must see. Before we get into any of that, though, I do want to just show you over here at earningsbeats.com. We do have a big webinar coming up. This is on Tuesday after the market closes at 4:30. We have a Max Pain monthly webinar. This is available for members only, so if you'd like to join us, there is a $7 30-day trial, but we refund that $7 within 5 to 10 business days. So really, it's a no-cost trial. You'll be able to come in and check out the Max Pain webinar. In order to sign up, you can go here. If you'd like to find out a little bit more information about what we offer, you can also click here on the Join Today. And if you just want to become a free Earnings Beats Digest membership or member, there is no cost of this membership. So there's no credit card required, and you can unsubscribe at any time. Simply put in your name, email address, and hit the subscribe button. But we'd love to have you join, love to have you check out our Max Pain webinar on Tuesday. All right, let's go through and talk a little bit about what happened on Monday in your daily market recap. Not going to spend much time here, but it was a good solid day. Dow Jones Industrial Average up over 1%. Same goes for the S&P. NASDAQ led the action, or certainly was among the leaders, up 1.87%. Mid cap almost 2% higher. Small caps about 1.75%. Leadership, we saw a little bit of movement in a couple of different groups. We actually had real estate leading, 2.45%. Technology 2.1%, moving back up into the fray among the leaders, which was nice. Materials, healthcare, financials, all higher. In fact, all 11 groups were higher. All 11 sectors were higher. But real estate and technology were the two that were leading the market back up. Let's see, economic reports out on Tuesday. We're going to get the September Empire Manufacturing Index, Empire State Manufacturing Index. The expectation is for it to come in around 6. August was 3.7, so we're looking for improvement there. August industrial production. In July, it rose 3%. We're looking for a 1.2% increase in August industrial production. And then August capacity utilization in July was 70.6%. We're looking for that to jump to 71.8%. So overall, we're looking for some pretty good economic news tomorrow. We'll see how that impacts the 10-year Treasury yield. 10-year Treasury yield simply going sideways right now between about 0.6%, 0.75%. I did put this correlation on here, which is the correlation between the 10-year Treasury yield and the relationship of the growth stocks versus value stocks, the IWF versus the IWD. And the correlation is showing us that there's a negative correlation. So in other words, when the 10-year Treasury yield is moving up, that means money's rotating out of defensive treasuries. And when that's happening, most of that money tends to be going into value-oriented stocks. Things like banks, some of the beaten down pandemic stocks that didn't perform very well on a relative basis coming out of that March low. When we're seeing the 10-year Treasury yield doing that, it's telling us that our economy is starting to get stronger. So some of those economically sensitive stocks tend to do better in that situation. So when we're going up on the 10-year Treasury yield, the ratio of growth to value tends to go down, which is the reverse. That's that inverse relationship. And when we pull back, rates are getting cheaper. And when rates are getting cheaper, that actually fuels the valuations on many of these high growth names. So the ratio tends to jump when the 10-year Treasury yield is coming down. Anyway, This was just a way to visualize a little bit the correlation, that inverse correlation that we've been seeing over the last year. Most of the time is spent in inverse or negative territory. It's not a perfect relationship. You can see we occasionally do move into positive territory, and this is not something I would expect that's going to be in effect for years and years. I think given our current situation with very, very low interest rates, I do think that maybe in the near term, this is going to stick with us for a while. All right, in the news, got a ton of stuff to go through here, so I'm going to try and go through it quickly. These are all things that came out after the bell today. First, Monolithic Power Systems, MPWR, raised revenue guidance. The stock was up about 2% after hours. You can see this is a stock that's been pretty strong in terms of its accumulation distribution. Recently, it pulled back, showed some strength on Monday. I expect with this news, we'll probably see a little bit more strength tomorrow. EXLS, this is a company that guided Q3 and fiscal year 20 revenues and earnings per share higher. They also said they'll accelerate their repurchase program. And the stock is up $4.15 after hours. It's up 6.72%. So it's back up above the moving averages, and we'll see whether or not it can hold it after the close tomorrow, but at least at the open, it does look like a pretty strong day for EXLS. CWH, this is a company that's been heavily shorted in the past. I think we're putting in a cup off of an uptrend, and the news out after the bell certainly isn't going to hurt this potential cup, that's for sure. They raised their fiscal year 21 outlook. Stock was up about $1.95 after hours. That's 5.4%. And it looks like it's breaking this resistance area around $36, or it looks like it will tomorrow. We'll see whether or not we open there. Next up, Scotts Miracle-Gro. They raised their fiscal year 20 revenue and earnings per share forecast. Stock's up $8.18 after hours, or 5.12%. This is a stock, again, been very strong. Accumulation distribution's been strong. I think we're probably going to make another run for that 170 level and eventually break out. This was an interesting one. PPD, they raised their Q3 revenues and earnings per share after the bell, and the stock was down $1.55 after hours. I'm not quite sure what went on. Maybe I missed some news somewhere, but that's a 4.58% drop. And this is one that has been, performing pretty well, although the accumulation distribution has been suspect for sure. But overall, this has been an uptrending stock. Next, FedEx. You think we got a weak economy? Well, FedEx doesn't think so. They're raising shipping rates effective January 4th, 2021. Stock's up another couple bucks after hours, almost 1%. And they report on Tuesday after the bell. We'll talk about that a little bit later in the show. And then the last one I had here was NEE. This is Next Era Energy. After the bell, they announced a 4-for-1 stock split, raised guidance. Stock's up $17.08 after hours, or a little more than 6%, breaking out above this prior high. Once again, you can see accumulation distribution has been strong on this stock. All right, let's move on to talking technically. Talking technically, I want to just point out here the positive divergences that were in place on the S&P 500 and also within the technology group. So here's the S&P 500 going lower. You can see the PPO on an hourly chart also going lower. We bounced, we come back down on this low right here. You can see the PPO is higher. Now, this doesn't always call a bottom. It sometimes can call a temporary bottom where we go up, test that 50-period moving average, get a center line reset on the PPO, and then we could be free to roll back over again to the downside. Or sometimes these this type of a signal does mark a major bottom, and we rally off of it. I think the key is going to be whether or not we can get through this gap resistance right here from September 4th. See the gap down on that Tuesday, September 8th. Notice all these tails. 2 days we tried to get through that gap resistance, couldn't do it, went to a new low. So I think if we get through on Tuesday and get through that 50-hour SMA, I think we got a key gap resistance level that we're going to have to try to negotiate up at about 34.20. Also, if we pull up the XLK, you'll see similar action here. Move down, PPO's going lower, but on the rally and the next low right here, positive divergence. back up. Notice gap resistance is the key, 118. Got the 50-hour SMA to deal with. So we're not out of the woods, but certainly things look a little bit better. Software, lower low, higher PPO. Got up not quite to the 50, not quite to the center line. And once again, you can see the difficulty at that gap resistance. So we've got a number of things that we've got to watch for in, as we move into Tuesday. If we can't negotiate these and we start to roll over, then that would certainly argue for a little bit weaker September. And maybe we go down even on the S&P into the 32, somewhere into that 3,200, 3,300 area. That's possible. Let's see, what else do we have here? Let's move on to the daily chart. I'm going to show you the S&P 500 on the daily chart. So I talked about 3420 and that gap resistance, and I can pull that out up right here. Gap resistance from September 4th, 3426.96, right? The 20-day EMA is at 3402.39. So 3402 up to 3426, that's a pretty good area between the 20-day and that gap resistance that the S&P 500 needs to negotiate. If it does, I think that would really start to argue maybe for a cup, or maybe after we go up there, we set a lower high, come back down one more time, slightly lower low, that we could get a bullish wedge. But I think if we get through that gap resistance, 34.26, things are going to start to look much more bullish for the market. Let's see, the XLK. Let's take a look at that on the daily chart. All right, here we got the daily chart. There's your gap resistance up here at 118. Notice here we're squeezing between the 50-day moving average and the 20-day. So 50-day SMA, 20-day EMA. We're squeezing in between it. If we go back down and lose, 112, certainly 111, that would definitely argue for a little bit more weakness. Maybe we go down as far as 110, maybe even on an intraday basis, a little bit lower than that. But that's why I'd be watching to the downside. Upside, we got to get through that 118 level. All right, let's keep moving because I do want to spend some time looking at this biotech effect and what I mean by that. First of all, biotechs, when they get rolling, they can really get rolling. And I want you to look today, 3.4% gain, and look at the volume coming in. There was a big merger in the group. We had Gilead Sciences agreeing to buy IMMU for $88 a share. And I think that created a lot of interest in the group. We did close above the 20-day moving average. Of course, we saw that back at the end of August, early September, but we didn't see it with this kind of volume. So a lot of volume here. Notice on this pullback to 2250, we held the 2250 lows back here. I still like biotechs, and I know I've talked about them a lot. I own the IBB, which I've just been sitting on for a while. It hasn't been performing very well since July, but you can see the biotechs going down, getting back up above that 20-week moving average. And I think that's really important because sometimes you get to move up, you go a little bit below that 20-week, and then when you come back up, you can see a big run. I think the next couple of months, 2-3 months could be, I think biotechs could have a very strong fourth quarter. And this could be the start of it. We'll see whether or not we get some follow through tomorrow, but it's at least good to be aware. Now all right, so let's say you do like the biotechs, okay? So we got a nice little rally today, and we think it's gonna go higher. What can we do? Well, if you go into, if you go to your dashboard and then go down and look for scooter reports, this will bring up the scooter reports for large cap stocks. And then you type into the search box, biotechnology, and you can see the biotechs come up with the scooter rank. Now, these scooters used to be a lot higher. Biotechs were on fire up until about, I don't know, maybe 7 weeks ago. And then we saw that move down. You can see it here. It's a weekly chart, so about 7 weeks down. Starting to come back up, though. We'll see whether or not that sticks. From a scooter report standpoint, though, you could start to look at some of these scooters that are higher, the ones that are outperforming. I actually like some that maybe haven't done so well, and I'm going to show you how you can find some of those by running a scan here in just a couple minutes. The other thing you can do is move to the mid caps. So if you want to try and find stocks that maybe could have a little bit more upside, they tend to move faster, and small caps even more so. I would just caution you that as you move into some of these small cap names, it can get very risky. You know, you have to be aggressive. You've got to have a high tolerance of risk to get into small cap stocks, individual small cap stocks. If you don't have that kind of mentality, I'd stay away. Maybe look at the IBB or the XBI. These are ETFs that track the market. The IBB is more focused on some spread out, but it's more concentrated in some of the larger names, whereas the XBI is very widely diversified. So if you want to get into more of the smaller names, the XBI might be the better choice there. But the way I would look at this, and I ran a scan, and you might find this interesting, maybe you want to do something similar. I looked back, and Biotechs, if I go into a daily chart, Biotechs reached a high on July 20th. Now, if you go back and count the days, July 20th to the 31st is 11 days, 31 more days in August is 42 days, and then 14 days through September 14th gives us 56 days. You divide that by 7 days in a week, you got 8 weeks. So 8 weeks ago, Biotechs were at a high. Now, the scan engine, when you start talking about days ago, the scan engine is going to look at trading days, not at calendar days. So 8 weeks ago, there's 5 days in a week trading days. So that's 40. But we know we had one holiday in here, Labor Day. So I did 39 days. So I actually ran the scan I think you might find interesting. Type equals stock. The daily 50-day moving average of volume has to be greater than 300,000 shares. So I'm looking for stock. I'm looking for greater than 300,000 shares. 39 days ago, I want to see what scooters are above 98. Now, maybe you make that 95 if you want a bigger sample, maybe even 99 if you want to get the cream of the crop. But 39 days ago, when the biotechs were at the high, what was leading? What were the biotech stocks that had real high scooter scores? That's the whole idea here. And then the group is biotech. So I'm only running the scan against biotech stocks that 39 days ago had a scooter above 98 and that they're also liquid. They trade over the last 50 days an average of at least 300,000 shares a day. All right. And when I run that, first I check syntax, make sure everything's good to go, which it is. And then I run the scan. Now, 20 names came up. Okay. So if I could go back and I could say, okay, give me everything over 95, and you're going to have a whole lot more. Check the syntax. So instead of having, 20 names, I'm going to have, well, let's see if I can, here we go. So instead of 20, well, actually only 29 names. That's not bad. And then you can put them in scooter order. So this is current scooter. So some of these have remained very strong. IMMU, this is the one I just spoke about earlier, that was bought out by Gilead Sciences. So this is Immunomedics. And so with that huge buyout, stock had a massive day today. And that's why the scooter is up at 99.8 there. But you can see there's still a handful above 99. So they've still under the formula of the StockCharts technical rank, they still rank out at above 99. But I thought what might be interesting is looking at some of these that have not held up so well. In other words, while the biotechs have been pulling back, these stocks have also been pulling back. And I have a handful of them I thought I'd pull up and just show you. Now, keep in mind, again, these biotechs, if you're going to get into an individual stock, you've got to be very, very aggressive. You have to have a high tolerance of risk. Some of these names, especially small caps, if you're going to get in, you can see right here, it'll tell you small, mid, or large. If you're going to get into any of these small caps, I'm going to pull up IBIO first. But if you're going to get into any of these small caps, you've got to be willing to accept a lot of risk. This is also on the Amex, not on the New York or on the NASDAQ. So keep that in mind. But here's what I like about the stock. When it ran. And we can see that. We saw it back in February. We saw it in June and again in July. Now, we have been moving lower and lower and lower, but I did notice the volume start to pick up. We also did come up and creep up on this 20-day moving average. This is one that, if it gets going, it could really jump, but you've got to be willing to take a lot of risk. This is a stock that easily could be back to the 160 area. That's 25%. That would be a 25% haircut from where it is now. So if the biotechs get hot, this is one that certainly could go on a run, because it went on a run back on July 20th. This is when the market topped, or when the biotechs topped. And you can see the stock was up to $7, $7.50. Came all the way back down below 2. Could be ready for another run. We'll see. Notice also that when we pulled back, we came all the way back to this gap support where we had gapped up back in June. All right, next up, and I'm just going to pull these up. These were all in the scan results. ALT. The thing I like about this one, if I annotate, notice where the breakout occurred. See the big volume in July? Ran up to that July 20 high right there. Huge move up. Where did we break out from? About $12.50. Where did we just come back to? We were up at $35, came all the way back to $12.50. So this, and now it looks like we're starting to turn here. So again, this is very aggressive, but these are the types of stocks that could generate nice returns. All right, next up. How about BTAI? This one, after gapping down back in August, and you can see again, July 20th, there was your high. But after gapping down back on in August, excuse me, mid-August, we've started rallying back, and we actually closed today just above the 50-day moving average. First time in about 6 weeks, maybe 6.5 weeks. Volume picked up. PPO trying to go positive. Now, we could see a top and roll right back over. Again, you've got to be wise. There's no way to trade some of these without taking considerable risk. You have to be willing to take risk. So there's no way really to avoid it when you're getting into individual biotech names. You can make a lot of money, but you can also lose a lot. My suggestion, I'm not a registered investment advisor. I point this out a lot. I can't give you advice, but my suggestion from an educational perspective is to keep your position size small when you're in individual biotech names. I wouldn't have as much in it as I would, FedEx or, another company that, in a different area of the market that's not nearly as volatile. All right, a couple more of these. CODX, another very volatile stock. Move down, but look at the volume. Look at that volume over the past week, pick back up. Now, it's already run from 8 to 14, but this was a $32 stock back at the beginning of August. So, when it gets moving, it gets moving. And certainly the volume shows us there is interest picking up here. And then the last one, this is actually a stock that I still like. I know it's been beaten up, certainly has rolled over below the 20-day moving average, but I still believe that this is a solid stock. The accumulation distribution remains very strong on this one. So even though we've been moving down, volume hasn't been that great. When we do have volume, for the most part, we've seen big moves to the upside. When we have lesser volume, that's when we've tended to see some of these sell-offs. So I still believe the stock's being accumulated, and I wouldn't be surprised to see another run in REGM. Anyway, that is your Biotech Effect. And now we're going to look at the earnings spotlight and then the 3 you must see. Earnings spotlight first. Lennar came out after the bell and reported some pretty good results. Easy beat on their top line. They reported $5.87 billion in revenue. The market was expecting $5.53 billion. They beat on the bottom line, $2.12 versus $1.51. So that wasn't close. And they made comments that fundamentals in housing remain very strong. So the economy strengthening, interest rates remain low. This is a really good environment for home building stocks. And that's essentially what Lennar had to say. You can see the stock up near this 80 level. We'll see how it opens tomorrow, where it goes from here, but a breakout above 80 is what you're looking for to the upside. To the downside, I think it marked the bottom down around 71. So we'll see whether or not we close below 71, but I think we're in a trading range and I would look for this breakout above 80. Two stocks that'll be reporting on Tuesday after the bell: Adobe Systems. Adobe, obviously, a lot of the software stocks are going to be looking at Adobe's results. I think also, more specifically, cloud computing stocks are going to be looking at Adobe's results. Stock got up to 540, put all the way back to 460, and is now consolidating. I suspect we're going to get a good report. Now, whether or not we get a breakout, that remains to be seen. In fact, it would have to be a really good report because a lot of good stuff, I think, was built in prior to the earnings report. And with all the recent selling, we're now quite a bit off of that earlier high. So it would take a really good report and a strong market reaction to get back up through that 540 level. Also, FedEx reports. And, I actually liked UPS more than FedEx, but FedEx has proven me wrong. FedEx has been killing it. UPS has held up okay, but FedEx is easily the better performer of the two over the last 30 days or so. They came out, as I mentioned earlier in the show, they're raising their shipping rates effective January 4th, 2021. Stock's up another couple of bucks after hours. It's been straight up, and when we look at relative strength, I mean, could it look any better than this? Delivery services going straight up, FedEx relative to delivery services going up, relative to the S&P going up, and delivery services has been one of the best areas of the market. So definitely FedEx looks strong. I would expect a very, very strong report again on FedEx. Now, is it going to rally? I don't know. Maybe we get a pullback to the 20-day. Maybe we get even more of a pullback. Who knows? But I do expect good results coming out tomorrow evening from FedEx. All right, let's move on to the three you must see. I'm going to start off with PK. PK broke out above these recent tops. You can see a lot of effort to get through about 10, 10 and a half. Then we tried to start getting up closer to 11. Well, we closed 10.99. Volume's been a little bit stronger of late. We're starting to finally see the accumulation distribution move up, which is now at about a 2-month high. So PK looks like maybe, and this is in the hotels, this is Park Hotels and Resorts. So it's in what had been a pretty weak area of the market, but definitely strengthening here. I think Park Hotels looks like it could make a run maybe for that 15 level back in June. Copa, CPA, Copa Holdings, another one that recently has broken out. Another one also that is trying to show some strength in its accumulation distribution at about a 2-month high. And another one, I think, running for that June high, which is up at about $61, $62. So I think notice the bounces off the 20-day. This is a good clue that you're in a stock that is trending higher. When you are not trending, you tend to fail to hold the 20. And see how the 20 just seems to mean nothing for a while? Well, now it seems to mean something again. So I think we're trending higher. I think we're going to challenge that 62 level. Last stock, Apache, APA. I just mentioned this one because it comes down right here to this prior support in July. Had a nice reversal on big volume today. Intraday, if you look, we had a lot of selling early and then pretty much buying the rest of the day. So I thought Apache, maybe we're getting a little bit of reversal there. That's it. Again, want to mention Max Payne monthly webinar Tuesday after the bell. Would love to have you. Make sure you go to earningsbeats.com. You can click here on this link or click on this Join Today button. It is a members only webinar. If you want to just check out Earnings Beats, see what we're all about, maybe check out the Earnings Beats Digest newsletter. It's a free newsletter, comes out Monday, Wednesday, Friday. No credit card required. Just simply type in your name, email address, hit the subscribe, and you'll be part of it. That's it. Everybody have a great rest of your day on Tuesday, and I'll be back Wednesday morning for your next Trading Places Live at earningsbeats.com. Take care, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.